It's about that time of day again here, boys and girls. Welcome back, welcome back. Newsletter time. JJ here. SchoolOfTrade.com. SidewaysMarkets.com is the blog address. It's November 20th, 2014. It is November 20th already. Boy, oh boy, flying through this third week of the 11th month of the year. Boy, what an exciting day today. Oh my goodness, right? Did you see the Philly Fed report today at 10 o'clock? Was somebody drunk behind the switch over there in the land of the Philly Fed? I mean, we had the biggest jump in the Philly Fed, since 1993? I need like a special calculator to figure out how long ago that was. What an insane day. And of course, that got everybody partying, right? Yeah, the punch bowl was being passed around after that. Equities go back to highs. Crude goes back to highs, right? We grabbed it on the way back up. We don't trade the news, right? We trade the reaction to the news. But boy, what an exciting morning and into the afternoon. And crude is still pushing higher. Boy, I could keep talking about this all evening. But before we jump into our exciting newsletter, and I got a bunch of good stuff to talk about tonight, hopefully you'll give me a few moments here instead of tuning in to President Obama talking about immigration here tonight. But let's listen in. First of all, 3 things here on our blog. Make sure you're watching this video right now on our blog right now. Calm it down, JJ. Calm it down. Calm it down. Deep breath here. I know, I'm so excited. I can't wait to talk about tomorrow. I got OPEX Friday for tomorrow. Before we jump in, though, make sure you guys are watching this video right now on our blog at Sideways Markets. Couple reasons why. Now, if you're watching the video right now on our YouTube page, that's perfectly fine, but make sure you click the link below the video on the YouTube page, and that will take you over here to the blog. 3 reasons. Reason number 1, you can download all of my charts for tonight, have them ready to go for tomorrow by following that link right below tonight's video, right? So take me up on that offer, right? Grab all my charts, get them on your computer, have them ready for tomorrow, and you're going to use those levels for tradable opportunities. Now, don't forget, I'm going to be in my trade room tomorrow morning using all those levels as well, right? So if you need help with this stuff, just come out and see us tomorrow morning in the School of Trade trade room. It opens at 8 o'clock in the morning. Next thing here, upper left-hand corner, you might be wondering, what does it feel like to be a student in our trade room? What does it feel like? What does it sound like? What does it look like? Well, I would love to show you. I got a free pass for you to come out, attend our live trade room. Just click that link in the upper left-hand corner, right? And I will send you a free pass to attend our trade room. Third thing here, that's right, there were 3 things here today. Third thing, right above my ugly mug, you'll see a spot there for your name and your email address. We have a special nightly newsletter mailing list. So this way you never have to worry about missing another newsletter ever again. I promise I will not waste your time with spam and other junk email. All right, so 3 things on the blog here tonight. First of all, download today's charts. Have those ready with you tomorrow in the trade room, right, or in your own trading. Second thing here today, free pass in the upper left-hand corner. And third, our nightly newsletter mailing address or mailing list. Guys, if you grab the free pass or if you register for the newsletter, make sure you check your email. I'm going to send you a verification email to make sure I have the right address and to make sure you're not a robot. All right, guys? So make sure you check your email after you register. All right, let's jump right in. Now, as of last night, I was talking about a selling opportunity here on the Russell. But if you recall, in last night's newsletter, we talked about the fact that we were teetering on this 53.7 area right here, right? This key level of support, and it still is a key level of support, right? You can see bounced off at once. Now, if you go back and rewind the tape to last night, my exact words were, just to have it collapse today would have just been too easy, right? I mean, that's just too easy. So, thinking, okay, it's not going to be that easy on us, right? So it'll probably break below, fake out, right? Trap in all those sellers, jump up before moving lower. Wasn't that exactly what I said last night, right? 24 hours ago. Now, here's what I love about being a trader, right? If this doesn't blow your hair back, guys, you're watching the wrong video right now. You're in the wrong business. Because today we had exceptionally strong news at 10 o'clock in the morning, right? U.S.-based news. This is an equity index. So it's going to respond pretty bullishly to that. Now, what do you think? Are the cosmos all lined up? I don't think the Philly Fed was listening to my newsletter last night. I mean, I wouldn't blame them, right? But I don't think that they were listening to my newsletter last night and said, let's jack up the Philly Fed report this morning and get this thing to go up just so JJ looks good in this video. No. Isn't it incredible how the markets manifest this stuff? Which comes first, guys? The technicals or the fundamentals? Which comes first? Do the fundamentals call the technicals? Do the technicals cause the fundamentals? It depends on who you ask. If you ask somebody like myself, I am trained on technical analysis. I'm a student of technical analysis. That means Wyckoff, Gans, Stettlemyre, Dow, right? List goes on. So I believe that the technicals, which started from the very first tick of the very first trade of the very first day the market's ever opened. Remember, this market, and every market, is a byproduct of everything in the past. Just like you are. You as a human being are a byproduct of everything you've ever experienced. You are. Every opinion, every bit of fear, every bit of greed, you're a byproduct of everything you've ever experienced. That's exactly what the markets are. So there's no way for me to say that one news event caused this market to move up, right? I can't make that statement, okay? I'd be naive to think that was the case, or foolish, right? Whichever is the case here, right? But yet networks like Bloomberg and CNBC, right? They want you to think there's a linear cause and effect. There isn't. So we're not going to say the news is the reason why the market was susceptible to jumping up, and the news was simply the match that lit the flame, right? Okay, so now we find ourselves right now in a technical selling opportunity here. Now this is exciting because we used a technical clue combined with a fundamental trigger today to put us in a great spot to be a seller. Now here's what I see, and this is just my personal interpretation. I see the Russell getting bailed out today by this news report. We've got no news tomorrow because tomorrow's OPEX. Okay, we heard Philly Fed and existing home sales. They were red hot today. But guys, look at the bottom of the chart. Look at the bottom of the chart. Do you see volume increasing as we went higher? Hell no. No. We see volume staying right where it is. Look, right? There's no jump in volume right there. This is still going lower. Okay, so remember, Charles Dow told us back in the late 1800s, he told us volume confirms the move, right? Charles Dow, the great-grandfather of Western technical analysis. Yeah, Dow as in Dow Jones and Dow, yeah, that guy, kind of a big deal. Okay, well, he told us there were millions of ways to explain a low-volume move, but only one way to explain a high-volume move. We have a low-volume move back up off news. Have you ever heard a professional trader say to fade the news? Absolutely. Guys, I can't call it short right now because I still haven't seen a trigger. But we are right there right now, and I'm looking for triggers because this is just too perfect, right? This is exactly where you want to be selling. They trapped in the sellers. They jumped up to our sell zone here at 69.4. This is exactly where you want to be selling. Maybe we go a little bit higher, but tomorrow morning, what should you be looking at, guys? What should you be watching tomorrow? Volume. If we push higher, you should be seeing volume slowly deteriorate, and it may even get all the way to the high, right? We may ride the coattails of this tomorrow all the way up to that 90.5. Remember, guys, I'm not just blindly selling the red boxes and blindly buying the green boxes, right? What am I doing? I'm waiting for it to test the red box, right? Test the area, and then look for a reversal off that area and a trigger, right? An entry pattern, basically, to get into that trade. Why do I do that? Well, because I can't predict. I don't want to predict, right? I'm not in the prediction business. I'm in the reaction business. I'm in the stay patient and wait for my time business. And we are almost ready for that time. Guys, 1,200 big round number overhead. Like I said, right now, my vision on this, my translation of this is we caught those sellers, the news bailed out the buyers, right? And now we go lower. But hey, if we don't, I'm not going to cry over it. I'm going to buy like everybody else tomorrow if we see volume increasing as we keep making little short-term highs. Here's a better looking chart. Here's a better looking chart for that Russell. Geez, there's a lot on this chart. Yeah, there's a lot on this chart. But you can see, we got our downtrending channel, very easy to spot there. And guys, we're right there. We're right there. Now remember, here's the way I always think of it. Here's the way I always think of it. Because I get calls all the time at the office and say, but Joe, price is rising. Shouldn't you be a buyer right now? And I say, okay, I'm going to agree with you on that. Price is rising. So let's be a buyer. Let's talk it through. Where do you buy? Tell me, where would you buy on this chart right now? Do not say right here, right? Because you can't buy the high. You can't buy the top of this channel. You can't buy at a premium price. Are you cuckoo? Right? Are you crazy? You can't do that. So think about this. If price is rising, if your position on this is price is rising, fine by me. You're right, price is rising. So where are you going to buy? Buy at a discount. Where would a discounted price be? It'd be down around here. That's the way that I think of it. So even if you were a bull right now, right, which I'm sure there are a lot of them out there, right? You know you're onto something right when you're contrarian, right? When you're thinking a little bit differently than the crowds. Okay, I know it's a lonely place to be out there, right? But that's where the profit's made. So we know that, okay, you're right, we're bullish. You're not going to buy this high right here. You've got to wait for price now to pull back so you can buy it on a pullback. So even if you are a bull right now, you can't do anything right here. Okay, so now the sellers come in. I'm a bear right now. Where do I want to sell? I want to sell at a premium. Right? The opposite of a buy. I want to buy at a discount, sell at a premium. This is easy stuff, right? This is not rocket science. This is day trading. Doesn't need to be complicated. Sell at a premium. Whether you're selling your home, selling a bag of coins, right? Selling a used car, it doesn't matter. Sell at a premium. Sell at a high price. We're ready to sell. We are ready to sell right now. But again, I need my trigger. So tomorrow, the way I see it is, if it starts going lower, you're good to go, right? You're good to go. We start coming off these highs tomorrow morning, you're good to go. I don't need to worry about anything else. I got 40 even, I've got 30.3 even, and then dare I say 11.20. I doubt we get there all the way there tomorrow, right? So be on the lookout, though, for targets down at this low, 48.2, right? 11.40, 11.30.3. Those are some easy targets for you on the way down. All right, I'll give you guys more targets tomorrow, okay, in the trade room, so just come out and see me there. But if we go higher, right, if we keep going higher, again, I'm going to be watching that volume indicator down bottom. Look, look, look. You can see for yourself. Volume got lower as the price went higher. I can tell you what it's not confirming. It's not confirming the buyer's in charge right now. Okay, that's what it's not confirming. So we get a big move up. Again, like I said, the sellers should be drooling over this chance to sell these highs right now on the Russell. Just my 2 cents. Tomorrow, we look for clues. We look for proof. Let's keep going. I'm excited for this tomorrow. This could be a great session for the Russell tomorrow. We shall see. Next up here, from the mighty Russell to this funny yellow metal they call the gold futures. Now, gold is definitely consolidating right now, and it's stuck heading higher. Obviously, we're bullish right now on gold. We got higher highs, we got higher lows in the long term here. But you can see we got a wedge, right? We got a triangle forming here right now. So it's very clear that this gold is, should we blame it on the ECB? Should we blame it on the speech from Obama today? Should we blame it on OPEX tomorrow? I don't know. Whatever you want to blame it on, it's consolidating right now. Now, here's the way that I think of a consolidated range. Whenever I see consolidation, I think, what was the trend before we got into that range? Here's a better way to think about it, right? Here's an easier way for a new trader to think about it. I'm going higher, then I find consolidation. Now, consolidation could be a sideways range. It could be a wedge like you're seeing it here. It really doesn't matter. The key here, though, is that we're bullish going into the range. That's the most important. The next clue is there are 3 areas where you can trade this breakout. There are 3 ways to trade this. Are you ready? Number 1 is a trap at the low, right? Wait for price to try to make a run lower, When it closes higher, bingo, you got them. Okay, there's the first one. Second one is a break of the high. That will be the lowest percentage opportunity, the break of the high. Very rarely does the first break of any range work successfully. Right? Okay, deal? That's lower percentage. Then you've got the one that I love. This one's my favorite. All right? You can keep a secret, right? Just between you and me? Okay, good. I feel like we've gotten to know each other here. I can trust you, right? Okay, this is my favorite one, is the pullback, right? And this isn't that special, right? It's a very simple way to do it. It's a pullback, okay? 1, 2, 3. There are the 3 ways that you're going to trade any consolidated range. There you go. You just mastered it. Now what you want to do is pick out those spots. Find this place and find this spot. I would recommend, and again, just my personal opinion, I would recommend skipping the break up, right? Because that's just not a high percentage opportunity. It's one of the 3, but it's the lowest of percentages. Okay, so now you know. Now look back at the chart. Okay, now we know buying symmetry, right? Going higher, bada bing, bada boom, right? Trap in all the sellers, bam. There's one option for us tomorrow. Okay, option number 2. This one's a little more tricky. You gotta make sure you know that range well, right? Make sure you know that range well. Now, could you trade inside the range? Sure. Buy the lows. Buy the lows. Why do I say buy the lows and not sell the highs? Isn't it supposed to be buy the lows and sell the highs? Well, no. It's buy the lows, take the profit at the highs, but we're entering the trades buying at the lows. Why? Because we're bullish going into the range. Easy, right? Very easy. Know that range. Here's the range that I see right now. There's the range you can see from 1204 down to 1173. So if I'm going to take this on a break up to the highs, I need to wait for it to pull back and then buy it afterwards. Right there. Okay, so now you can see the deal. We go higher, we consolidate. We trap in the sellers, we buy at the low. We buy the symmetry. We buy the buy zone, right? Whatever it hits, we'll look for the trigger. We then break up, we pull back, and we buy it again. Easy, right? Easy, easy, easy. Easy as falling off a horse. So that's a strategy for tomorrow on the gold. Now, you can see we've got some good targets waiting for you up here, 1207.4, 1223.5. But remember, guys, big round number, 1200. This 1200 level is no joke, okay? This is not your average big round number, okay? Big round numbers are not that special in all reality, but this one is. This is the break-even point for the mining industry. If we're below 1200, people lose their jobs. If we go above 1200, people keep their jobs. It's pretty simple. I'll bet you can guess what the mining industry's lobbyists are trying to do right now. Absolutely. So, get a triangle, get a range here, look to buy at the lows, and if it does jump up, don't be that sucker that buys that high. Wait for it to pull back, right, and buy it on a pullback at the high of that range. And guys, you can use the top of that triangle, right? So if we break up, you can buy the top of that triangle. That is another very high percentage way to do it. Same thing, right? It's the same basic principles now. You find out what direction were you going in before the consolidation, and then, of course, break out, pull back, and you're in, right? That's the way to trade it. It's not that difficult, right? Or, right, we go lower. We try to get the sellers get trapped in and they get their head taken off, right? And we buy it at that low, right? It's the same principles as what I described before. All right, guys, be ready on gold tomorrow. If you see it drop off these highs, don't take the bait. Get ready for the buy at the low. All right, guys. And one more thing here about gold before we go forward here, as we go to this final chart here on gold. Just remember, you got OPEX tomorrow. You know these markets are going to be a little bit touch and go tomorrow. So if you come in tomorrow morning and we're just sitting on top of 1200, okay, just take that as a sign to grab the golf clubs instead of grabbing the gold contracts. All right, guys, because we don't have any news tomorrow. It's all OPEX, right? So you're going to have some geopolitical, something will have to come tomorrow. And usually on an OPEX Friday, all we get is Obama, and he's probably not going to do anything to shake the markets up tomorrow. All right, guys. So we know that gold is trading consolidation. We get a bullish long-term trend. So we focus on buying at the lows, right? There's your spots right there. There are the best places to be a buyer right now down at those lows. Now, I know that requires some patience. I'm well aware that's going to require some patience. But guess what, guys? That's part about being a trader. Part of being a trader is being patient. If you want the best, you got to do the best, right? Wait for those lows to be tested. As always, guys, come out and see me tomorrow in the trade room. I'll walk you through this every step of the way. You don't need to do this on your own. How about that crude? Today was an excellent day for crude price action trading. I'll tell you that much. Today was one of those days where it was a little bit sloppy, right? It's been sloppy all week here on gold. I'm sorry, on crude. We've had a horrible time finding patterns this week, but price action trading has been red hot. It's been very, very easy. Today was a great example, though, of just fundamental news being used as a scapegoat, right, for everybody just to buy this. I was talking to John Henry here in the office a few hours ago, and he said, imagine how many people have been waiting to buy $75 a barrel. Just think about it. Just think about the sheer number of traders who saw $75 a barrel and thought, oh my goodness, I haven't seen this in like a million years, right? So we know there's going to be some buyers here. We know there's going to be that intrigue of this really cheap price right now. But here's the reality, guys. Here is the absolute reality. Ain't nothing changed as far as fundamentals go. All right. Yeah, we got some pretty good news today, and that news definitely sparked this rally. But, I've been doing this for over half my life. I've been watching these charts over half my life, and I've seen many, many times where these news events, they get everybody all hyped up. And they get them hyped up just enough to get everybody going in the wrong direction, and the professionals in the market come in and they, bam, take all their money. There's only two news events that I really respect. You ready? There's only two news events that I respect as being long-term market movers. What are those two news events? One of them happens 8 times a year. FOMC. We just had one last week. What's the next one? The next one happens once a month, the first Friday of the month. What is it? Non-farm payrolls. Those are the only two news reports that I would say we have to now follow this direction. And even then, I'm suspicious. And you should be suspicious too. It's so easy to put together a one-day rally. How many times have we seen crude go 3% up and then 5% back down, right? I mean, we've made a killing doing that. Well, look at this. Right here, right? Bam. Bam, right? Does this? Yeah, this doesn't look familiar at all. That doesn't look familiar at all. We've never seen this before, right? I'm having fun because this is easy. This is easy, guys. Now, don't even get me started on the volume here. Don't even look at the volume, guys. Don't look at it. Don't look at it. I know, right? It's pathetic. It's pathetic, right? So here we are now. We've got volume as we go higher here. Not quite there. Not quite there, right? We should have seen those buyers jumping all over it. The volume would have been pushing really high here, right, if they had this long term. Now, obviously, I can't guarantee anything, but from what it looks like right now, we have made our way into the sell zones that sellers are dreaming about, right? So we're looking to get short. Long-term trend is the downside, 76.56, 77.34. I have no idea how high this will go, guys. All right, I have no idea how high this will go. Anyone who tells you they do is lying to you. My gut tells me we go a little bit higher. That's what my gut tells me. My gut tells me we actually go a little bit higher. Maybe all the way to 78 tomorrow morning before you get that nice, easy short off the high. Or it might be Monday, right? It's tough to tell. We may still keep grinding. But I'll tell you right now, though, you are a fool not to be looking for a sell trigger right now. Remember, I'm not going to blindly sell it. I'm not going to close my eyes and hope for the best and sell these highs. I'm going to wait for it to make the turn and then get me selling those rips, right? Get me selling those retracements all the way back down. And as always, we'll give you guys up-to-date targets tomorrow morning in our live trade room. Now again, if we do jump up and we see volume confirming, just like we talked about on the Russell, right? If we see volume confirming tomorrow as we're going higher, then okay, then we'll be looking to be a buyer. But be very careful being a buyer right now on crude. Again, nothing's changed. We are still swimming in crude oil. There's tons of supply, and there's no demand, right? Today, this is just a reaction to a very strong news report. Two of them. So we're looking to sell the 78. We're looking to sell the 79.11. We're looking to sell 79.96, 78.45. I don't think we get all the way there tomorrow, but this is crude we're talking about, and I'd be foolish to say we can't, right? We know that doesn't happen. So looking for selling opportunities right now on the Texas T, right? The black gold. And then here is another great chart here. This is probably going to be the most useful chart for you guys tomorrow. Okay, now I don't need a million levels. You know what I'm talking about, right? You know what I'm talking about, right? Those charts you see, and there's like a gajillion levels on here, right? Yeah, you know, I think we're going to go, oh, well, I have no idea what I think, right? I mean, there's too many levels on here, okay? You don't need all that. Less is more. Less is more. Stay focused on the most important levels. That's all you want to focus on, right? Because if you're crying wolf every 5 minutes, sooner or later, you're not going to know when the wolf really shows up, right? Now, sell zones overhead. These are the same sell zones we found on the 32, right? Those are the same exact areas. They're just zoomed in. But check out the 77.12. I've got my eyes on this 77.12 for just a little bit of a big reason. A little measured move, right? Little bit of a measured move, right? I got my eye on you, 77.12. I got my eye on you. You're also right at the top of that bull channel, and you're just a hair off that 77.34. Guys, if I had to guess right now, I would say we go higher overnight to 77.12-ish, right? Don't ask me to be that specific. You don't need to be on the tick, right? We might go to 77.20. We may go to 77.10. It doesn't matter. Okay, but the reality is that would be where I would expect us to first begin to see the failure. Okay? Again, look for the reversal and look for the selling opportunities down, and you've got some targets waiting for you here: 75.42, 75.33, 74.52. All right? If we keep on going higher, you've got range highs all the way up top, 78.09. Okay? If we go right through it, that's where we go next. It's pretty easy to see. Right? If we blow right through it, then no harm done. Remember, I'm going to wait for price to collapse off this area, then make it easy on myself and sell. I don't need to predict. There's no ribbon for being the first person short, right? There isn't. Okay, so looking for a price to go up and then come back down. Okay, easy. Easy, easy, easy. Now, if you're a buyer right now, here's a great example, right? Because I'm sure some of you right now are shaking your heads going, Joe, I knew you were crazy, man, but now I know you're crazy, right? Now I know you're really crazy. How can you be a seller right now? Okay. I'm with you. I understand. Hey, right? We can all make money together with different opinions. That's the best part of being a trader, right? I had a guy in the room today tell me that he took the exact opposite position that I did and made just as much money, right? That's great. So maybe you're a buyer right now. If you're a buyer right now, when do you buy? You buy at the highs? Hell no, you're not buying at the highs, right? You're buying at the lows, right? You're buying on a pullback. So here's the reality. The only option right now is to sell. That's the only option. There's no other option for us, of course, if we like making money instead of donating it to the market. There's no other option right now. If I want to be a buyer, you better be patient. This is the worst time you can possibly think of to be a buyer, right? And because I said that, you know it'll go up overnight, right? So, okay. But you don't want to make a habit of buying the highs. So if you're a buyer, you got to stay patient. The sellers are the only ones right now that have green light to be looking for the trigger. Okay? Be ready for it. Be ready for it. Now, not a lot to talk about for tomorrow, guys. Not a lot to talk about here for tomorrow besides 4 letters. OPEX. OPEX. Tomorrow is Options Expiration Friday. Below the video tonight, there's a link below the video that will give you the ability to download the 2014 Options Expiration Calendar. There's only one more OPEX left in 2014, so you better get it while it's still accurate, right? I'll put the 2015 up when we get there. So tomorrow, no major news. I mean, there is news at 8:30 from the CAD, right? So watch crude oil around the CAD news tomorrow, but you very rarely see any news making big headlines on OPEX Friday. You get a little bit of that self-fulfilling prophecy going to kick in tomorrow, right, guys? So you know traders, right? Traders know this is OPEX. They've been listening to me talk about it all week, right? They decide to grab the golf clubs tomorrow. They decide to get the turkey started for next week, right? They decide to go see grandma tomorrow, which, by the way, she misses you, right? Go see her tomorrow if you have time, okay? So Friday, November 21st, yes, that was exactly what I said. And just be happy. I'm not an English teacher. Options expire on Saturday. Last day of trading is tomorrow, the 21st. All right, guys? So be careful tomorrow. I'm going to go out on a limb tomorrow and say you're probably not going to see much tomorrow after 10:30. All right? Maybe you get something to 11 o'clock, but after 11:30 tomorrow, you really got to have a good reason to be trading tomorrow. So in early, out early tomorrow, and try not to get too upset by Obama tonight, right? There's a reason why none of the major television stations are picking up this speech tonight. I can't wait. I wish I could be there with a front row seat for this speech tonight. Can't wait. All right, guys? So options expire tomorrow. Be careful tomorrow morning. Get in early. Get out early. Selling crude. Buying gold. Looking at the Russell, right? Trying to sell the Russell. We'll see what happens tomorrow. And as always, don't forget, download those charts, grab your free pass, register for the newsletter list, and if you happen to stumble over here to SchoolOfTrade.com, if you happen to stumble by SchoolOfTrade.com, don't forget to register for our free trial. We got the best trial in the business. We also offer 3 levels of membership, beginner, intermediate, and advanced, and that's right. I've got someone chained up in the office 24 hours a day, 365 to help you guys if you got any support questions. All right, guys? Thank you so much for being here this week. What an awesome week. What an awesome week. Just an incredible week in the trade room, incredible week of trade calls in the newsletter, and I hope you guys had a great week too. Remember, everybody, you don't need to go at this business alone. You don't need to be doing this alone, okay? Come out and join us as a member of School of Trade. There is a billion-dollar industry built on the idea that trading has to be complicated. We do a great job at simplifying it. Don't let the word get out. As soon as the Goldman Sachs of the world realize that the average JJ can be trading in any market around the world, things are going to start to tumble. Guys, come out and see me tomorrow in the trade room. If not, we'll see you guys next week for a short week here. We got a holiday coming around the corner. But don't forget, next Monday is going to be Rebalancing Monday. So we got a kind of a sleeper tomorrow morning for OPEX, and then Monday is going to be Rebalancing Monday, and the fireworks are back on. We'll see you guys then. Same bat time, same bat channel. My name is Joseph James, broadcasting live from headquarters here in Los Angeles, California. Have a great evening, right? Go Obama, and we'll see you guys tomorrow. Adios, amigos. Bye-bye for now.